Hey, listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available? Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is January 30th, 2025, and today on our call we have the CEO, Hylton Karon from iFabric. iFabric trades on the TSX exchange under the symbol IFA, and it also trades on the OTC under IFA BF. The company is currently trading at $1.10 with about 30 million shares outstanding, or about a $33 million market cap. I'd now like to hand it over to Paul and Hylton.
Hey, thanks a lot, Trevor. Hylton, great to have you back.
Thanks for having me.
You've been with us a few times, and it's always good to get back and updated. You guys are always busy, so it's always good to get caught up, and this time's no different. So, yeah, welcome here, and let's dive into an update bit here. But before we do that, let's just remind everybody what iFabric's all about.
All right. First of all, Trevor and Paul, thanks so much for having me back. And thank you, everyone, for your time to hear our story. iFabric Corp has started its origins, and our focus is always to do with fabrics, textiles, apparel, soft surfaces, things of that nature. And what we have pioneered over the last 12 years, and the reason why we went public, is technology for apparel. How do we make the wearing experience that much better for the wearer, and to an even greater extent, how we can enter the medical market, and what can we offer the medical market that isn't off the shelf and available today, to protect the wearer, to protect not only the workers in the hospital and the healthcare industry, but also the patients in that environment and in that marketplace. And we became aware of technologies in the early 2000s. And prior to us even going public, and the main impetus for us going public was this groundswell of what these technologies do to help the performance characteristics of apparel and surfaces. And we spent multiple seven figures for many years doing the research, doing all the background check to ensure that we had something credible and real before we went into the marketplace and went commercial. Today, we're headquartered in Markham, Ontario, Canada, with staff in the United States. We have a wholly owned subsidiary in Taiwan. We have staff in China. We have staff in Japan. So we really are well positioned globally to onboard some really major brands and major retailers that we've been able to bring to the fore. And the likes of the Under Armours of the world in the sportswear arena, the North Face, which is part of the VF Corp. We do a serious business with the Walmarts, the Targets, Kohl's, to name a few, Costco. These are all readily available out in the marketplace. We've done business for many years with these retailers. Needless to say, in tough times that we're going through right now, the lower end of the retail chain has really stayed the course, and they do better in these times. And call it fortuitous or call it good planning. We've always been very competitive in what we do, while ensuring that our revenue and our margin really has been, I would say, in the high 30s. We've now achieved into the 40s, and there's no reason why we don't continue to remain, a fairly decent GP company as we continue to grow the business. And I think that our financials, we've changed our financial year into last year from Jan 1 to December 31st. So we've just finished Q4 of our first January to December We did, January last year, I myself brought out a forecast. For those of you aware of the November, December strike in Vancouver, the comments and the questions I'm getting the last few days is how did that impact our biggest quarter, which is Q4? I can't talk specifically, but I can tell you that when we do bring out those numbers, Paul, I would really like to go back and have another go around with everybody to go over the hard numbers. We will do a webinar, but I'm very pleased that even despite not being able to ship all of Q4, to say that we had an outstanding year, I'm very pleased of the financial performance of the company. We've actually had 5 straight years of growth. So I think that that's something to be really proud of, where 5 years ago, this was a $10 million business. We're now in the high 20s and talking about how soon we're in the 30s and 40s. So I think that we've really demonstrated that we have brought out forecasts and outlooks and delivered. And I would hesitate to say that when you see the bottom line of the company compared to whatever it's been in the past, we're really showing a real strong performance. As we go into 25, we've got even greater optics of what 25 is going to mean to the company, with new categories and new product segments that I'm very excited. But in the vein of responsibility, when these things have been penned and put to bed, we will make those announcements accordingly. But as I've said in the past, we've always grown our market segments and we've released who we've grown them with. We've used 24 as a real good marketer and developer of new product segments that we've never supplied into before. These segments, believe it or not, in one key segment could literally in 2-3 years double the company from where we are right now. So it's serious. It's been a long road to get the kind of eyes on the company and the credibility of what we've been able to deliver into this market segment. And to be afforded this opportunity is truly exciting, and hats off to a really incredible team that we've built over the years. So they've done great, and I think I'm only looking forward to releasing throughout 25 these new categories. I will say that in addition to that, our core business continues to grow. So while we pioneered, for those who haven't heard our story before, we've pioneered antimicrobial and antiviral technologies, which are really pertinent to the medical space, for scrubs, for lab coats, for linens, for separation curtains in hospitals. And we did last year, we released the results of a clinical trial. I will go on a limb and say this categorically, that 25 will be the year we will release it in a journal. And so that's just a matter of when we get that brought to fruition. The results, the empirical data, as the scientific community put it, it was statistically significant results that we were able to achieve, which is truly encouraging for us. And it's something that the medical market are going to truly gather steam. This is a phenomenal new area of business for us. We've worked long and hard to get to where we are, and we're going to bear the fruits of the labor starting in 25. I would dare say the bigger year is going to be 26 and beyond, but certainly 25 is not going to be inconsequential in terms of the kind of revenue that we'll be able to do by starting to sell into that category. So with that said, it's really, we sell a variety of products. For those that don't know our product range, so we have started the company 20 odd plus years ago in the ladies lingerie specialty area. that area of business has just stayed the course. It is a profitable margin, contribute to the bottom line, but it is becoming 20% and less of our turn, and we'll never have the growth that's going to see us reach 50 and 100 million in the future. And so as we grow the business, one will see the categories that we've now started to deliver into, and 25 is going to be a real change year. I would say the only other instrumental change is 25 probably will be the first year where the United States exceeds the revenue of what we did in Canada. So while Canada has always been a real good market for us and will continue to grow, the opportunities, in that bigger market being the United States will definitely afford us many, many multiple years of growing this business to that 100 million and beyond. From the 5 years it took us to go from 10 to 30 is not going to take us another 5 to double from where we are today and beyond. So that's the kind of growth that we've been able to bring to the fore. Our finances, we'll release the numbers, but you can look at Q3 that we've put out. Our equity to debt is probably 15 to 1. Between our cash deposits, receivables, and inventory, today you're sitting at close to a $22-23 million number, and the debt of the entire corporation from an operational standpoint is around $2 million, give or take. So we really are well positioned to finance the growth of the business, to literally double the company with what capital we have on hand. And we're excited. 25 and beyond is just going to show the marketplace, what did COVID do? It just slowed us down by probably 18 months to 2 years, and we're back on track. So exciting times ahead. And what we've said, year after year we've delivered. We've been a little bit conservative, but that's not a bad thing. And we've hit the numbers. So pretty proud of our track record. And for those that know us a while, know we've delivered on whatever we've put out.
Fantastic. This is great. Just a reminder, everybody that's listening, if you've got a question you'd like me to ask Hylton, as I've seen some questions come in, just use the chat function and I'll make sure it gets asked. Okay, so Hylton, another year of growth. I know you've got new products coming out, but tell us, what was the reason for the growth? What have you been doing to continue this growth? Is it new products? Is it new initiatives in terms of new geographies? Maybe give us a little bit more detail on what's driving the growth.
It's actually a bit of all of that. So I think that the clinical trial went a long way for us to be able to say to the medical market, guys, we've really got something serious. When the nursing unions are now asking us, how soon can we bring these kind of products to the marketplace for their membership? So we've kind of made a little bit political in terms of how we've gone about it, to put the right eyes on the kind of products that we've spent years and years and years pioneering and staying true to. So it is with that in mind and all the testing that goes into that, that really, the kind of retailers that are going to take us on, they've got in the doors in the thousands, in the multiple thousands. So year one, historically, as we've learned, they're going to open you up with probably 500 stores. I'm just giving globular numbers. I don't have exact detail, but that's traditionally the way it's done. Well, when you've got 4,000, 5,000 stores, I don't have to tell you, it's probably going to be the highest ticket unit dollar sale per item that we've ever had. And when you're doing it and it becomes multi-million dollars, even at 500 stores, when they take you second year and you start doing a couple of thousand stores, I don't have to tell you, without any embellishment, that this business, that program can be a $20-30 million business by itself.
And so looking back last year, what specific products are you seeing are giving you the greatest sort of lift in numbers?
It's actually quite across the board. We've done
Okay.
a phenomenal job in the men's underwear. I would say that as a category has been phenomenal for us.
Mhm.
We launched it's out on the shelves. We developed for Walmart USA their own brand. So as opposed to us traditionally making it under George or one of their athletic
Mhm.
works, one of their private, their own brands that they own, they've now allowed us to really create our own brand, which is great IP for the company.
Mhm.
So now all of us, we've got a brand that's now in the US and in Canada that's done very, very well. As I say, it's an initial phase in with many years of growth opportunity there. Another area that is very interesting is ladies leak-proof underwear.
Mhm.
We're talking our business,
Mhm.
that the initial orders there were in the multiple millions, and that was test orders for this market segment. So we see the growth opportunity there. Once again, to be able to double that business should not be a stretch in
Mhm.
terms of what I'm saying to you.
Mhm.
Uh, we do a wonderful Costco business with the Roots license.
Mhm.
It's really gone from strength to strength. We've had a couple of years under the belt. The first year was ladies only. The second year, which we've just delivered now, is ladies, men's, boys, and girls.
Mhm.
So we're really, getting those extra opportunities. The ladies by dollar is still the biggest segment of the four. But, when you're adding a million here and 500,000 there, the 500,000 and millions add up quite nicely to round off a program, which is exciting. We are, through their intro, looking at getting USA brands because the product is very saleable. The Roots brand is clearly a Canadian play. So we actually are in conversation as we speak right now with other brands to license their brand to be able to open those categories at Costco in the United States. So
Mhm.
that's, we're in that phase right now. Um, and that would really take us to the end of 25 and into 26 if we got an opening, because they're literally designing now for the end of 25 into 26.
Mhm.
If we don't pull it off probably in the next 2, 3 months, we'll have missed that window for spring 26 and it'll be spring 27.
Mhm.
So I don't want to say, that we have it. We're working on it.
Mhm.
If the timing doesn't have it, we'll certainly have it the year later. So we've got a lot of additional brands. I think thanks to you, and I can't speak more of it, but there's now new technologies where people have come to us, and I think that it's a bit of a credit to us that the kind of conversations we're having with them, 30 seconds into a conversation, they realize that we know the textile game,
Mhm.
which gives them a real high comfort level. And thanks to you, the conversation was unbelievable.
Mhm.
And we're going to have meetings and take that along. Who knows where that goes?
Mhm.
But those are other markets and I'm going to be blunt, have never even thought of.
Mhm.
But it's an obvious, we've got the mechanics and we've got the know-how to take people who are really R&D people and let them
Mhm.
stay with what they do well. And we are the company that can obviously give them a great return on their license fee and take them to market leaders in the United States, Canada, and abroad. So that's
Mhm.
another exciting development. It's early days. Who knows what that could bring? But
Mhm.
it really was so synergistic with who we are and what we
Mhm.
are. And we've had many back and forths, and we look forward to really getting serious. In
Mhm.
February, we're going to have meetings in our office in Toronto,
Mhm.
and move that forward. So there's a lot of variety of product.
Mhm.
Um, I think the one thing that I just want to also just bring up is, unfortunately, with what's gone on in America since the new
Administration.
Trump's administration, is not. It's not what it's done to Canada so much, because we don't really manufacture in Canada. So all our goods are Asian sourced. So there's a probability of, let's say, a 10% at source cost spike. Well, we've been talking to the buyers. They're fully aware that there will be some lift in cost, because everything does get passed along. We still have 4 to 6 months in inventory in our warehouse right now that's already landed. So it's not something that day one is panic stations. We'll be able to work these additional costs into the equation. I do want to, there's no doubt that as our volumes have grown quite significantly, it gives us leverage with supply chain. So they're going to have to help absorb if they want it. Or alternatively, we've already looked at Vietnam, Cambodia, Bangladesh. There's a lot of other places that we can source product from. And so I don't think we waited for January 20th to happen for us to figure out that this is a possibility. So we really jumped on that many months ago, and we're fairly comfortable for all but one category. We've got an alternate source of from another country. So it's just the other thing to keep in mind, that it's what boat we're in is the same as all our competitors. So this is not something that's endemic to us. It's really an industry-wide situation. Who knows? Over the years, there'll be, hopefully some calming of the nerves, and we'll see better days for everybody. But we'll deal with it, and it's not a train smash by any stretch of the imagination. And just to that point that I brought up earlier about the Vancouver strike. Another very good point that I'd like to just everyone to understand. Not only did we not receive a single cancellation of product, but it was all and will be shipped within Q1 of 25. So it was a timing delay, in some cases weeks, in some cases a month, but it's all product that was for spring. I don't know how many people need swimwear in December and January, but retailers have got their way of putting stuff on the shelf way earlier than the season. And so we really were fortuitous with our relationships that nothing was canceled. And they've been more than understanding. And we've got a full, in some cases, the product has gone out in January in its completion. So, concerning at the time, would it have made 24 an even bigger year? Yes. But in the bigger picture, and in the reality is the goods went out, and we're happy, we move on. So these are the things we can't control. It's just having the right product that the retailers still want, speaks to the kind of relationships we have.
You've done a great job of answering my questions even before I ask them. So I like that. I like you make my job easier. We talked about tariffs. We talked about new initiatives. I love the fact that that's one of the really cool things about this business is you guys are really innovating in a sort of a really static business. I mean, most of the smart technology or this intelligent fabric, I mean, we're starting to see it more and more applied in so many different places, which again is impressive and really what's the backbone of your business. I mean, tariffs and how you're going to manage around those things, that's helpful to know. But what other challenges are you facing, or maybe new challenges that sort of keeps you up at night right now?
We really, for those, and I think I'd like to take 30 seconds after everybody hangs up to take a look at our share float and the understanding that our business, I think the biggest frustration is getting the investment community to appreciate what we have. And so I've spent quite a bit of time with Deborah of Adelaide. We were in Boston last week. We're getting more and more eyes on this company. The kind of reception I'm getting is phenomenal. I think that people have to really start watching us and really to understand that our share price and our float is our market, is our market capitalization. You buy this thing, we close it up tomorrow, you get your money back. The market really hasn't got their head around what we're doing. And I think that 24, 25, 26, when you see us starting, our EBITDA is going to only go up and up, and our profits are going to be, better and better. This is a cash-making business now. The conversation is, well, how soon is it a dividend, or how soon is it a share buyback? Well, the fact that you're even bringing those kind of conversations into the game. We're a strong company. As I said, our equity to debt is probably around 15-1. Our growth is really becoming, where we're going to be, how soon you're going to be a $50 million, and how soon you're talking about growing the numbers from there. So I think that is the real takeaway. And if what keeps me up at night is just trying to find the avenues for the investor community to really appreciate what we've built and where we're going. I don't want to overgrow. Certain people say, you should, with extra capital, grow the business. We're growing it at a pace. I think that growing this business 15, 20, 25% a year, and remember, year over year, those numbers just mean even bigger numbers. We're a reliable, we've got a phenomenal track record with our, commercial partners, and we're going to stick to that. So if we grow this business in the next year another 20, 25%, we'll be more than happy with that, to be able to deliver, let the business grow, and the staffing grow with that number. I think it's a comfortable number for us. And so, what keeps us up at night are the variables we can't control.
Right.
So it's the strikes, it's the tariffs. It's things that are outside. I mean, the fact that I'm not talking to you about us having to do M&As to grow the company because we're tapped out speaks to the kind of dynamic opportunities. I will say, and I can't say too much, but I will tell you that the time is going to come. We've actually started the science where we're no longer going to be intelligent fabric technologies. We're going to be intelligent technologies because we're going to take our applications to hard surfaces. So there's a whole other world that's really quite dynamic in terms of what our company is going to be able to do in the future. So whether it's a bed rail in a hospital or a door handle in your office, there's so many other in the sports arena, transportation. There's quite a number of opportunities. We really are thinking long term, and we're starting to do the science and pay our way now. A lot of the chemistry is synergistic with what we use in textiles. So we're a little bit more au fait with that. So really look in the years to come. This company has such dynamic growth. I want us to keep a focus and grow at a metered pace. But when I say that this business can grow 20, 25% a year for many years to come, is not a thumbsuck. It's really the kind of work we've done in the prior years to give us these opportunities.
And I want to cover off two things. You sort of highlighted a few things that I should make sure everybody understands. First off, the float of the company, insiders own quite a bit. Maybe give us an idea of what percentage is owned by insiders.
It's north of 65. I know that our COO and our CFO exercised some shares recently. So I would say it's close to 70%.
Yeah. So very large vested interest from insiders. And as well as, now I know one of the last times we spoke, we talked about some of the hidden value within the business. I think you guys own your building outright. That's not
We're about to. That's about to become an outright. So we'll make an announcement, but we own 75%, but we're about to take out, there's nothing endemic in that. But yeah, we're days away from that transaction.
Yeah.
It's going to
And I think on the books, I think it's in there
two and a half
at
million or something, and it's a $12 million building.
exactly. So there's
Yeah.
a whole bunch of hidden assets.
So,
Yeah.
we can show that asset, but it's a phenomenal asset, and it helps us with the bank underpin. And something else that really isn't a press release, but we do our annual review with the bank, and they've upped their lines of credit to us going forward. That we just, the lawyers are busy putting the final ink on that. They've given us a phenomenal increase in facility, even though, as I opened up this conversation, we're not in the, we operated 24 without 1 cent from the bank. We've got such growth opportunities. We're going to need the bank money. It's now getting to such big numbers, and that's fine. And we've got other opportunities there as well. We've got the resources, and as you say, this building as another sidebar asset, which is close to $10 million, that's not on the books.
Yeah, perfect.
Yeah.
All right, Hylton, we got a bunch of questions come in, so why don't we dive on some of these things and
Sure.
get some of these answered. Okay, Rahil's asked about our competitive advantage. What's your competitive advantage over competitors like Gildan or Canada Goose Holdings? I mean, that's not really your competition.
And a lot of people ask us, who's your competition? To which I answer, there's no chemistry technology companies that make product. And there's not really that many product companies that have got their own technologies. So they go into the marketplace and they get from the whatever. There's no two technologies. There's no follow-up. There's really no consistency. So we really have pioneered we would not be in business as a private label product manufacturer of any category if it wasn't for our technologies. So what really is our calling card is this class-leading technologies, whether it's a water repellent, whether it's an antimicrobial, there's things for eczema, there's this array of products. It's all about these technologies that really hooks the attention of really the consumer, because the consumer today is that much more educated because of what the world has just gone through. So it really is a phenomenal time for us to use this 1-2 punch. So we've got graphic artists, we've got product developers, but without the technology infused into the Gildans would kill us. Now, the other thing I just want to say, and it's a bit of a segue, but Paul, you know us a long time, Trevor, we've never wanted to be a commodity company. So, whether you're a Gildan or whether I know Canada Goose, there's Columbia, there's Patagonia, there's so many, there's the North Face. I mean, I know we're just not a commodity company, and I will not ever get into those kinds of, we really do want to find a premium product to make in that category.
But in a lot of ways, those are potential customers rather than competitors. They would come to you and try to license your technology.
So the North Face for us has been phenomenal, and they've only been a technology partner. We don't do any manufacturing for them, and it is they are purely a chemical purchaser of ours.
Yeah, no, perfect. Good to understand that. Okay, I've got a question from Dom. It says, what's the reason behind the uptick in the gross margins?
Well, we do something as a public company that I suppose goes against the logic. Every couple of years, we look at our list of all our products and all our customers, and we jettison our lowest return on margin, which is, so we're not hungry just for revenue.
Right.
So where we can get a better lift from a better margin product, and year over year, even if it's not a major lift year, because we've replaced that revenue with better sales, that's who we are. So that's one of the things. The other thing is, as our volumes have grown, we've been able to use that muscle to negotiate better sourcing costs from the factories. So where we were at the 37, 38, and we're now in the low 40s, And I'm not saying, we're going to get to 50, but I still want to stay in, soon I'd like to see 43, 44. We're still going to claw every ounce of extra return that we can. And our biggest asset for being is our huge increase in volume allows us that flexibility of negotiation just to get better sourcing pricing. And of course, where you're now shipping 2-3 years ago, we were shipping 2-3 containers a month. The last month was 13 containers for one customer. So where you can go to the logistics companies and get a better rate, all these, all the little pennies add up. And we look for every bit of savings that we can.
Yeah.
So it goes to the bottom line.
Yeah, it's advantage of scale. As you scale up, you get these margin improvements. Okay, perfect. Okay, so speaking of scale, Colm asks, as you continue to scale revenue, do you need to increase your headcount? And then what other investments are top of mind right now?
Okay, so absolutely. But, so to that point, the headcount that we need to add is somebody in admin. So we need somebody who can do follow up on logistics. It's somebody who can add up on EDI, which is electronic data information. I don't need another CFO. I don't need another CO. So it's not I don't need more salesmen. So I'm not paying more commissions. So when you look at all these things of where is the lift in revenue to overhead, it's only going to be more and more disproportionate. So will there be more hands on deck? No question. But it will be the mid-tier staffing that we need because of the volumes of the increased volumes. So if we need another graphic artist, we bring on another graphic artist or another product developer. These are not your executive level salaries.
Right. Gotcha. Okay, there's a question around tariffs, but I think we've covered that, so I'll leave that one. Okay, Vic just asked, who's your largest competitor? When you look at your business, who out there kind of looks somewhat like you?
It's hard because I would say our biggest competitor are the big names. So you've got we do a lot of business with Maidenform. So if it's who are the other lingerie manufacturers? Who are the other sportswear people that manufacture product for their own brand? So we've really, as I said, we've tried to be unique in that space. And for me to, Hanes, for example, in the underwear section, but they do mass volume. We really try to find that unique. It is a more expensive product that we sell because of their technology. We're not doing the billions that they're doing in white men's underwear. Ours has all got a print on it. Every season it gets something new. It's a new fabric. So we're a little bit more technical, even in the fabrication and design. There's always competition. For us to say that we're in this alone, please believe me, even our technologies, we've got staff that are working on next generation. So there's always laws that come out that this chemical is now banned, yada, 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 and we keep our ear to the ground on that. There's a lot of environmental concerns in what the chemicals we use. So we've always got to replace a chemical with something more environmentally friendly. And we never take the attitude that there isn't somebody else on our heels trying to take this business away from us in whatever category it is. So, we work hard and harder at being current, giving the best value that we can. And I think that this hybrid idea of technology with product has really served us well. And I think in 25, when it's going to take a good 6+ months for us to be ready to announce this new category. That's something we'll be able to sail off into the sunset, because that's we're going to hold on to that for a long time. So there's always competition, and there's a competitor in every single segment. So You know, while I don't have anybody doing technology and clothing, they're always trying to mix it, but doing it as a second nature to what they do. We do it as an endemic part of our sale. But we never holier than thou that there's not somebody else nipping at our heels. We're
Yeah.
you know, yesterday's success is no guarantee of tomorrow's.
Yeah.
We just work hard, you know.
Yeah, and I would almost argue if there isn't competitors, then typically it means the segment isn't big enough to go after. So it's always healthy to have competition. But I agree with you.
They're out there.
Yeah. Okay, so Dom asked about Protex, and the question you kind of touched on, could Protex technology be applied to other types of products? You talked about hard surfaces. I mean, you guys are working on taking it away from just fabrics.
You'll see it in 25. 100% it can be applied to other. Now, keep in mind, Protex 2, how can I put it? You know, we're not the nicest people. I'm saying that facetiously. And why I'm saying that is, if I was to say to you that Protex 2 is one formulation and one chemical, it's not. So just to very quickly put some color on that, nylon, rayon, polyester, spandex, wool, whatever, they all need a different recipe, but we call it Protex 2. So if anybody, you know, you got to break your neck to figure out what we've put in A, B, C, D, E, and F. And that is because of our textile development know-how, that we can develop these different recipes. And we've got phenomenal staff in Asia that have done this for a long time, and that can do it. So Protex 2 is not one solution, and it's not one chemical or one recipe. It's a host. So
it's a platform. It's a platform.
It's a platform, and we've just come up with a generic name for it. It's like calling everything Teflon, but it could be 15 different versions.
Yeah.
So that just, you know, we're not going to make it easier for people to figure out how we do what we do. But that Protex 2 family of products that we sell is the majority of our business.
And so Rahil comes with a bit of a follow-up question there. So you got Protex, you got UV-Tex, you got Fresh-Tex. Like, what do you deem the value of that IP? And, or maybe the way to say it is, like, if you were to start from scratch, how much do you think it would cost you to sort of redevelop that IP?
We've spent multiple millions through the years to get to where we are. And as I said, we went public in 2012, and I had these technologies from 2007, and I was spending 6 and 7 figures a year for multiple years testing. We were the biggest naysayers. How can this thing be so good? And continually really put it through the ringer to really, before we went commercial with these things. And nobody's come along with a better mousetrap, and we're still working on next generation. That's, you know, that's who we are. So we really haven't, you know, we haven't stopped our development. But to put a number on it, Paul, we spend over $600,000 a year on lab work for our customers. Every batch that they manufacture, a sample has to be sent to us, to a third-party laboratory, and they put their signature on it that what they've done meets the standard. So we spend, you know, R&D and lab work is over $500,000 a year spent for us.
Yeah, exactly. It's interesting. These questions are coming in. It's almost like they're lining up right after the other. But as far as like the new products, you keep talking about new products and new initiatives here. But what are you the most excited about in terms of some of the new stuff you're working
on? One of them is really an area of business that I wanted to get in from the beginning. It just took us a long time. When you're going after the medical market, you've got that extra, there's extra work that is required. And now we've done the extra work. We've got the clinical trial. We've got the base to now going after. So we're not going after only the retail space, but we're going after you know, medical products. It's not a medical product as in a healing product. It's just, you know, apparel and whatever's needed in that market space. And it's exciting for us. So I think that that's given us an opportunity that over and above all the other retail opportunities, this is really going to take us to another level.
Mhm. And Hilton, where do you see this ending? Like, what's the end game here? Or if you were to look 5 years out, what do you think this business looks like?
It's interesting. There are some big medical supply companies in the US that have let us know that we're on their radar.
Mhm.
We certainly, when I met with the brokerage firms and everything, in the financial game, they said no company in Canada gets to 150 million. You get bought out before then.
Right. Yeah.
So, we're just continuing to grow at this point in time. And we're not, we know that that day will come where a big multinational can put an offer on the table we can't refuse. We just continuing to build the scope of what we do
Mhm.
and the value of what we do and build the markets. So could they take it to another whole other level? To give you an idea, the scrub market in the United States alone is $1
Mhm.
billion a year. So you start putting your toe into those size markets and those size opportunities. You've got years and years of eating away
Mhm.
at market share. So there's a lot of, I'm not saying that specific, I'm just giving an idea of one area of retail. So there really are many multi-years. Yeah, the end game down the road at some point in time, whether it's a technology sale, there's nothing to say that somebody really likes one of our technologies and puts a number down and says, we want to own this technology. It's more endemic for our industry, and we would like to just buy this from you. So whether we sell off the technologies, whether the whole company gets sold, whether it's a certain division, some of our plays are so big they could really spin off into companies of their own, and you can sell that off. So
Mhm. There's a lot of avenues. There's a lot of
yeah,
avenues.
we're
Yeah.
not there yet. We know that we're building value.
Mhm.
So our job right now is build value, build the company, build the solid financial base that we have, continue with the
Mhm.
formula that we have, and build it.
Mhm.
And and then we'll see down the road
Let's see what
where we
happens.
land up.
Absolutely.
But it's an obvious question,
Yeah.
and rightfully so. Yeah.
Yeah. I mean, I always view these type of businesses, when you have a technology that has to go prove itself in such a large set of categories, usually once you validate it, there's a bigger entity that comes in and says, okay, I can apply this throughout my platform
And
so
and
much
and it and
faster.
it wouldn't surprise me. No,
Exactly. And
no question.
it becomes a real strategic value in something like this. I can see
No
that.
question.
So in regards to looking ahead, I've got Rahil that's asked more specifically about you. Now you're still a young guy. I know you're still
Love
out
it.
there enjoying
You see the
golfing
gray
and
hairs?
whatnot.
Okay. Yeah.
Still a much better head of hair than I do, so you're way ahead of me. But maybe describe a bit about your team, because we've actually had the opportunity to speak to some of the other members of the team, and you've got a great
We've
team.
got great second generation in
Yeah,
place.
yeah.
In fact, truth be told, they've made my life. I'm really looking at the bigger picture. I'm looking at financials and looking at strategizing and doing what I should be doing. We've got a phenomenal a COO who's my replacement and then some, who's going to do a better job than me.
Mhm.
So people investing in this company have to know it's not a one-man team. We've got a phenomenal base underneath us. And yeah, next generation is well and truly in place already. People who've come from various other industries.
Mhm.
Uh, and Yeah, we will look at certain key talent as we grow this business. Uh, for key, as I say, whether we want to spin off a particular division, a lot of opportunities. But I think my biggest solace, when you say what keeps you up at night, is the fact that there's strong demand for what we do, and
Mhm.
that's you know that it's good and it's bad. You've got to deliver on it, but it really is. It's helpful. It really is helpful. We're not blasé about it, but it gives us great opportunities for the future.
Yeah, definitely. I mean, it's impossible to build a 20 million plus a year business without having a real strong team behind you. So,
Yeah.
so certainly congratulations on that. Okay, as we wrap up, let's as investors and we're watching you, I always ask this question. We look ahead. What kind of milestones or catalysts do you think we should watch out for as we go here?
I think that 25, as I said, you're going to see these new market segments that I'm really pleased. I think that 26 or beyond, and I'm not going to put a date, but I think the fact that we are going to start pioneering categories outside of apparel are really the kind of milestones that we need to achieve. And I want to get this journal put to bed. Is it going to the next day and take this company to a new time and space? No, but it'll cross the T and dot the I for us on that journey, and let people know that we did keep to our word and finished off what we started. I think that it'll be very important for the future of the company, that these are the kind of, we say we're going to do it, we've stayed with it, and we're going to see it through to completion. I really just think that 25, you're going to see continued growth, which is important. I think it's the quality of the growth. So I think when one talks about that increased GP, we want to continue with quality growth. We really, that's just as critical as anything in terms of what we do. And segments, you'll see these new segments. We will make announcements when these things have been put to bed. They're very close to put to bed, so it's almost there because we got to deliver some of it in 25 still. So it's got to be done soon. And more of the same. I mean, I'm not going to be unhappy with repeating the kind of growth that we've had in the last few years. Just more of the same ain't going to be a bad thing.
Yeah, exactly. I mean, exciting times, lots of new products, lots of new initiatives. I mean, that's always tends to be an inflection point for business like this. You guys
Okay, so there was a question, Dom just raised, how much of the building do we own? So we're going to own 100% in the not too distant future. We're going to own it outright. So I'll stay tuned.
And I think it's 75% that you own right now.
We're at 75%, but it's going to be 100% soon.
There you go. Makes it a lot easier that way. Okay, so lastly, Hylton, is there anything we missed? Is there anything you want to make sure everybody sort of remembers from this call?
I think that it's easy for me to say it. I've owned such a large percent from day one. I've given up such a small percent because I believe you've got a CEO and a president whose life is on the line. I mean, we eat, breathe, and sleep this company. Honestly, we're proud of it. And I think it's not going to be surprised when you start, the day's going to come, this thing's going to jump. It's not going to surprise me. It's coming. So keep your eyes, if nothing more, I can't say anything more, but keep your eyes on it, and we'll keep talking.
Exactly. Stay tuned. Well, we definitely will have you back in no time,
Thank you so
especially
much. And
after the next exciting moment.
Thank you for your time. Thank you.
Oh, absolutely. We've been speaking with Hylton Karon, CEO of iFabric. Symbol again is IFA on the TSX. Hylton, as always, enjoyed chatting and appreciate the time you gave us today.
Thank you.
Bye for now.